All right, everyone, buckle up. The news cycle is moving at warp speed, and if you're not plugged in, you're missing out. We've got a packed show today with some seismic shifts happening across the landscape. Get ready for updates that could redefine industries and reshape your portfolios. You're watching Electro Drive News, and you won't want to miss a single second of what's coming up. First off, we're diving deep into the electric vehicle arena, where a major player, long overshadowed, is showing signs of a serious comeback. This company, once a darling of the market, has seen a dramatic fall, but recent performance suggests a powerful resurgence is underway. Could this be the dawn of a new era for them? We'll break down the numbers and what it means for the future of electric mobility. Then, we're shifting gears to a story that's sending shockwaves through the trading floors. A key stock in the EV sector has just experienced an explosive surge, shattering critical resistance levels and igniting a rally that has traders buzzing. What's driving this massive upward momentum, and where is it headed next? Stick around to find out. But that's not all. We're also tracking a bold strategic move from an automotive giant that could shake up the entire market. They're making a high-stakes gamble with a new model launch, pricing it strategically to capture a crucial segment. Is this the game changer they need to reignite their stock and reclaim their position? We've got the inside scoop. And finally, in a move that technical analysts are calling a major bullish signal, a significant stock has just broken through a long-standing technical barrier, a level not seen in years. This could be the precursor to a massive upward trend. We'll unpack what this technical breakthrough signifies for the future. Stay locked in. This is Electro Drive News, and you need to hit that subscribe button and ring the bell so you never miss an update. The comeback kid is a former electric vehicle darling finally staging a dramatic return to form. With recent stock surges and upcoming earnings, all eyes are on this company's next move. While the electric vehicle market often seems dominated by titans like Tesla and BYD, their Chinese competitor, NIO, is making a compelling case for renewed attention. Once a celebrated stock market favorite, NIO has experienced a significant downturn, plummeting 89% from its early 2021 peak. However, the narrative is shifting dramatically in 2025, with NIO's stock price already climbing an impressive 49% year-to-date. This substantial gain begs the question: are we witnessing the beginning of a sustained recovery for the embattled EV maker? Investors are keenly awaiting NIO's latest quarterly earnings report, scheduled for release on Tuesday, September 2nd, to provide a clearer picture of its financial health. While the detailed figures are yet to be unveiled, preliminary second-quarter delivery numbers offer a glimpse of positive momentum. NIO delivered over 72,000 vehicles during the quarter, marking a robust 26% year-on-year growth. To put this in perspective, Tesla's deliveries for the same period reached 384,000 vehicles, a 13% decline from the previous year. Although Tesla's volume is more than 5 times that of NIO, its market capitalization stands at a staggering $1.1 trillion, approximately 75 times larger than NIO's. This disparity highlights the different stages and market positions of the two companies. Tesla's diverse business operations, including power generation, make direct comparisons challenging, and it boasts a history of profitability that NIO has yet to achieve. Despite NIO's smaller production volumes compared to Tesla, its business is rapidly expanding. July saw a slight deceleration in NIO's year-on-year sales growth, dipping to 3%. Whether this represents a temporary dip or the start of a slowdown remains to be seen. However, the long-term sales trend appears positive, supported by an established presence in the Chinese market and ambitious global expansion plans. New models, such as a spacious family SUV, are expected to further boost sales volumes. The broader electric vehicle market continues its upward trajectory, a trend anticipated to persist despite challenges faced by major players like Tesla. NIO, like its competitors, navigates risks such as potential U.S. tariffs and intense pricing pressure within the competitive EV landscape, which can compress profit margins. NIO's vehicles are recognized for their sleek design and attractive pricing. The company's innovative battery swapping technology could prove to be a significant competitive advantage, although its long-term viability depends on the advancement of fast-charging battery technology and extended range capabilities. From an investment standpoint, profitability remains the key challenge. NIO has consistently reported net losses, with its first quarter net loss nearing £700 million. Analysts anticipate another net loss for the second quarter. The capital-intensive nature of scaling an EV manufacturing business is evident, mirroring Tesla's own early years of unprofitability. At the end of the first quarter, NIO's cash reserves were roughly equivalent to its net loss for 1 year. The company has the potential to raise additional capital, with its current stock price surge potentially offering a favorable window for such a move. The critical question for investors is whether NIO can achieve break-even and eventually transition to profitability. Any concrete signs of progress toward profitability could trigger a significant surge in NIO's stock price. However, for those prioritizing financial stability, an investment may be prudent only after NIO demonstrates a clear path to sustained profitability. Still on the edge of your seat, we've got more electrifying news coming your way. Get ready for a deep dive into a stock that just made a stunning technical breakthrough. Breaking the chains. An electric vehicle stock surges dramatically, shattering key resistance levels and signaling a potential new bull run. What does this technical breakout mean for investors? NIO Inc., the prominent Chinese electric vehicle manufacturer, has delivered a spectacular trading session, rocketing 16% higher to close at $5.59. This surge represents more than just a daily fluctuation. It signifies a decisive breakout past critical resistance levels that have long frustrated bullish investors, prompting a reassessment of market positions. After an extended period of consolidation, NIO has finally broken free, decisively overcoming key technical barriers that had previously capped its upward momentum. This significant breakout was anticipated by many astute traders who had identified NIO as a high-conviction pick in recent weeks. The stock's ability to not only breach, but decisively conquer the $5.36 resistance level, which had acted as a stubborn ceiling, is a testament to the building bullish sentiment. With this former resistance now poised to become a support floor, the market is abuzz with speculation about the potential trajectory of this rally. The question on many traders' minds is not if NIO can continue its ascent, but rather how high this newly ignited momentum can carry the stock. The numbers from this explosive session paint a clear picture of a stock that is finally finding its stride. NIO began the day at an intraday low of $4.81, rallying to an intraday high of $5.63 before settling at $5.59. This impressive performance surprised even seasoned market observers. More importantly, the decisive breach of the $5.36 resistance level has transformed a psychological and technical barrier into a potential foundation for future gains. This move confirms the strength of the underlying buying pressure. Looking ahead, traders are closely monitoring several key levels. The immediate focus is on NIO's ability to maintain its position above the critical $5.36 level. A successful hold above this price point would likely pave the way for a clear push towards the $6 mark. Should NIO overcome this next psychological hurdle, the $6.44 level emerges as a realistic target for traders aiming to capitalize on the prevailing momentum. The technical setup suggests that if these levels are held, the stock has significant room to run. The breakout was not a random event, but rather the culmination of building market sentiment and technical conditions. Market chatter had been growing around NIO's potential, with several traders publicly advocating for the stock. The extended period of tight consolidation had effectively coiled the spring, and the surge in trading volume on the day of the breakout confirms increased institutional participation. This influx of capital often signals a stronger conviction in the stock's future prospects. While the current sentiment is overwhelmingly bullish, the market understands that no stock moves in a straight line indefinitely. Any failure to sustain the gains above the crucial $5.36 level could indeed send NIO back to retest lower support areas. However, for the moment, the bulls are firmly in control of the narrative, and the technical indicators suggest that the upward momentum is likely to continue in the short to medium term. What's next for this surging EV stock? We'll find out as we continue our market analysis. Next, a bold pricing strategy from an automotive giant could redefine its comeback. The $55K gamble. Could a calculated pricing strategy for a flagship SUV be the catalyst NIO needs to reignite its stock and dominate the competitive EV market? In an increasingly fierce battle for dominance in China's burgeoning electric vehicle market, NIO has made a bold and potentially game-changing move. Just hours before the official unveiling of its revamped ES8 SUV, the company strategically leaked pricing details, targeting a key market segment that could prove crucial for its comeback narrative. This calculated risk comes at a critical juncture for NIO, as it contends with formidable rivals like Tesla, XPeng, and Li Auto. Leaked information suggests that the updated ES8 SUV will be priced between 300,000 and 400,000 yuan when bundled with NIO's signature battery-as-a-service (BaaS) program. This pricing strategy positions the ES8 squarely in the premium segment, a move that analysts believe is designed to maximize both sales volume and revenue. By offering the ES8 within this range, NIO is attempting to strike a delicate balance, appealing to consumers seeking a high-end vehicle while mitigating the significant upfront cost of the battery through its subscription model. This approach allows customers to access a luxury SUV without the prohibitive initial expense of purchasing the battery outright, while simultaneously providing NIO with a stable, recurring revenue stream from monthly battery subscriptions. This pricing tactic is particularly significant when viewed in the context of the competitive landscape. By positioning the ES8 in this premium yet accessible bracket, NIO is directly challenging Tesla's market share in China while also intensifying competition with domestic rivals like XPeng and Li Auto, which offer vehicles at similar or slightly lower price points. The success of this strategy could either solidify NIO's position as a major player capable of strategic market maneuvering or trigger an aggressive price war within the premium EV segment. The market reaction to the leaked pricing has been palpable, with trading floors and social media platforms buzzing with speculation. Investors who have remained loyal to NIO through its recent challenges are viewing this launch and its pricing strategy as a potential validation of their faith in the company. The expectation is that if the ES8 delivers on its promise with significant technological upgrades and the attractive BaaS model, it could provide the much-needed impetus for NIO's stock to break out of its recent slump and remind the market why it was once considered a leading innovator in the EV space. However, the challenges facing NIO and the broader Chinese EV market are undeniable. The sector is characterized by intense competition, rapid technological advancements, and significant economic headwinds. Many companies have struggled to survive, and even established players are feeling the pressure. Therefore, while the ES8 launch and its pricing strategy represent a significant opportunity, they do not guarantee long-term success. NIO must execute flawlessly on production, delivery, and customer service to capitalize on this moment. Analysts and investors will be closely watching the official launch event and the market's reception of the ES8. The success of this model, particularly with the innovative BaaS integration, could be a pivotal factor in NIO's ability to regain investor confidence and achieve sustained growth. It's a high-stakes gamble that could either propel NIO forward or underscore the formidable challenges it faces in the hyper-competitive Chinese EV arena. Will this bold pricing strategy pay off for NIO? We'll continue to track the impact as we move to our next major market update. A 21-month EMA breakout. NIO stock achieves a rare technical feat, reclaiming a long-lost moving average that historically precedes massive rallies. Is this the start of a new bull market for the EV maker? Technical analysts are closely scrutinizing NIO's recent price action, as the Chinese electric vehicle manufacturer has achieved a significant milestone on the charts. After a prolonged period of trading below critical resistance levels, NIO's stock has finally managed to reclaim a crucial technical threshold. The 21-month exponential moving average, EMA, at $6.79. This breakthrough, the first since June 2020, is being interpreted by many as a strong signal of potential bullish momentum building for the company. Renowned technical trader at Dirty Green Paper recently highlighted this development, noting that NIO has delivered one of its most robust monthly performances in recent memory. The stock closed at $6.38, decisively surpassing the 21-month EMA. The significance of this level cannot be overstated. Historically, breaking above this long-term indicator has preceded substantial rallies for NIO. The last time NIO successfully breached this EMA, it ignited an extraordinary ascent, propelling the stock from single-digit figures to over $60 within a 12-month span. This fresh breakout has reignited optimism among investors who view it as a potential turning point, signaling an end to the stock's extended downtrend. The 21-month EMA is a widely followed indicator among institutional traders and long-term investors, serving as a critical gauge of sustained market momentum. For NIO, breaking above this significant level after an extended period of weakness suggests that the dominant selling pressure may be abating. This could mark the emergence of a new bullish phase, potentially attracting more capital into the stock as market sentiment shifts. Looking ahead, key price levels are being closely watched by the trading community. Resistance is currently observed around the $7.19 mark. Conversely, support is expected to form in the $50.80 range. If NIO can successfully maintain its position above these identified support levels, analysts project that the stock could be on a trajectory towards the $10.12 range. This would represent a substantial increase from its current trading levels and a significant recovery from its recent lows. Beyond the technical indicators, NIO's fundamental outlook continues to show signs of improvement. The company is actively expanding its vehicle lineup, introducing new models, and increasing its production capacity to meet growing demand. Furthermore, a generally improving sentiment surrounding Chinese equities in the broader market could provide additional tailwinds for NIO's stock performance. This combination of positive technical signals and a more favorable macroeconomic backdrop is creating an environment ripe for a potential rally. Many traders are drawing parallels between the current technical setup and the conditions that preceded NIO's explosive rally in 2020. While past performance is never a guarantee of future results, the confluence of a significant technical breakout and improving market sentiment has many anticipating a similar upward trend. The coming weeks will be crucial in determining whether this breakout can translate into a sustained bullish trend for NIO. Will this technical breakout signal a sustained rally for NIO? We'll keep you updated on all the latest market movements. And that's a wrap on today's electrifying news. We saw NIO stock surge on a major technical breakout, potentially signaling a new bull run. We also explored NIO's bold pricing strategy for the ES8 SUV, a gamble that could reignite its comeback. Plus, we dove into NIO's impressive stock performance this year, showing signs of a significant recovery. Don't forget to like this video if you found it informative, subscribe to ElectroDrive News for all your essential updates, and hit that notification bell so you never miss a moment. Let us know your thoughts on these stories in the comments below, and follow us on all social platforms to stay connected. See you next time.